Hello, friends. Trading success depends on knowing what kind of a market you're presently trading in. Is it a bull market? Is it a bear market? Are we presently in a bear market? Because each market type has its own symptoms, the way it trades, and the signals that it sends out through the trading terminal screen to all the market participants. I'm Vijay Bhambwani. I've been trading these markets for 36 years. I've been in this market since 1986. I've seen the various stages of development of this market from public outcry system to the current digital order driven markets. In through my videos, I want to help my viewers find their way out of market traps and get more and more profitable. For those of you who know me long enough, I use behavioral technical analysis and I believe in 360-degree worldview of the markets. I pioneered it in India. I taught it at exchanges, at universities, at corporate houses. I've written two best-selling books about it, and through my videos, I want to help you to learn this technique without any further delay. Now, just like a doctor understands the symptoms of a patient, we also use behavioral technical analysis to find out what phase of the market we are in. I consider trading to be warfare, and therefore I deploy combat techniques that I learned earlier in my life to formulate my strategies. Every civilization has methods and means to protect itself, ensure its survival. It has armies, it trains its soldiers to basically deploy some techniques. And the primary example of two very critical techniques that I have formulated into trading warfare is one from the Mahabharata. It's called the Chakravyuha, and the other deployed by ancient Greeks and Macedonians called the Phalanx. How do these two systems or formations differ? What it means for the market and what it means for you as a trader. Now, the Mahabharata talks of Chakravyuha, which is nothing but a ring within ring of soldiers. Chakra in Hindi means circle, Vyuha means labyrinth, bhul bhulaiya, or a maze. Now, the trick is to pull the enemy soldiers inside the Chakravyuha, one ring at a time. With every passing ring, the entering army or the entering batch of soldiers would be increasingly tired, but they would be encountering soldiers who are fresh and have not had battle. Ultimately, the entrant army would be encircled and killed. The primary example of the Chakravyuha formation and how lethal it can be is Abhimanyu, the son of the great archer Arjuna. He knew how to enter the Chakravyuha, but unfortunately did not know how to exit. The result was tragic and fatal. Every investor, I believe, is a soldier of fortune. You must know how to enter and exit the market at the right time. Your money is like chess pieces, and the market is a chessboard. Only if you know when to move your chess pieces in the right squares will you achieve trading success. So, remember, I've been warning you on my social media accounts about pulling money out of equities into sovereign investments for many months now. The screenshots tell you that adequately. Now, why was I telling you that? Because I felt the Chakravyuha formation was coming to an end. If you stick with me till the end of the video, I'll show you more. Now, the Chakravyuha is a pull technique wherein it pulls or entices traders to enter the markets, and therefore it uses greed. What are the symptoms or the telltale signs of a Chakravyuha? Look at your screen now. This is the snapshot window. Typically speaking, the snapshot window will show the last traded price ticking above the average traded price. Volumes will be higher. Bid and offer spreads will be fine. Advanced decline ratio will be positive, which is above 1. The basis, which is the premium enjoyed by futures over spot, will be positive. Impetus and the price will be higher, and the LWTD or the lift weight thrust drag index will be higher. Don't worry about knowing what the impetus or the LWTD is. I've got hyperlinks to these videos in the comment section, in the description below this video, and in the end screen at the end of this video. Now, the typical aspect of the Chakra Vyuha is that traders can see greenery everywhere. There's optimism, there's a feel-good factor. Nothing can go wrong. You want to eat one more chapati for dinner. Your appetite is good. The world seems to be a good place to live in. Now, nothing can go wrong, it seems, till it does. And then it's kind of late. But is it without any warnings? I don't think so. Let me explain to you. Stick around till the end of this video. Now remember, a tired entrant entering the Chakravyuha and fighting fresh rings of soldiers who are fresh and have not had the experience of fighting at all. So their energy levels are high. In this phase of the Chakravyuha where the entrants are being sucked into the market, remember how sometimes it is the metal space which is higher, sometimes it's pharma stocks, sometimes it's banks, sometimes it's technology, etc., etc. You hear stories, you hear fairy tales about super cycles. Remember the super cycle theory of commodities? I laughed at it, I debunked it, I recorded enough videos and posted enough stuff on my social media account to say I don't believe in the super cycle theory. This was the market pulling the unsuspecting investors within itself. This was the Chakravyuha formation. Now, all this gobbledygook is not really all that lethal once you understand your game. Now that traders have been roped in, what happens next? Enters the Phalanx Formation. Now this was formulated by the Greeks and the Macedonians. Alexander the Great used it with a great degree of finesse. Both the Greeks and the Macedonians were expert warriors. They formulated a near invincible military strategy that is used even till today by both our armed forces worldwide and police forces. What you can see on your screen is the Phalanx Formation. Soldiers used to form groups. Earlier in the Greek army days, groups of 256, sometimes even more, entire divisions perhaps. And they used to cover themselves with shields from all sides and including overhead. So they were protected by arrows and javelins being thrown in their direction from the enemy. Of course, they used to rely on the push technique. The Phalanx Formation, or the group of soldiers fully covered with shields from all sides, was called the Phalanx, used to push deeper and deeper into enemy territory and conquer grounds, slowly at first and then faster as the Phalanx Formation used to gain momentum. Typically, bull markets start with a Chakravyuha. They rope in the retail trader. They entice him to buy with the snapcoat window showing higher and higher ATP, LTQ versus ATP, and then it morphs into a phalanx. Okay, so then the bear starts to push the prices lower and starts to gather momentum. Now, since it's a push rather than pull formation like the Chakravyuha, the prices will be pushed lower. So on the snapcoat window, you will see the LTQ, which is the last traded quote or the last traded price, sticking below the average traded price. The bid and offer spreads are wider and they get progressively wider. Now, I've been warning you, as you can see on your screen right now, since late September that, hey, my friends, the bid and offer spreads are too wide for my comfort. What is the significance of the bid and offer being wide? What really happens is that the jobbing spread between the buyers and sellers becomes so high or so wide that you don't feel like trading. You feel a price difference of, say, hypothetically 50 paise between the buyer and seller, where the market lot is 10,000 shares, means that the transaction cost has now become 5,000 rupees, which is 50 paisa bid and offer spread multiplied by 10,000 shares. So you don't trade, all right? But big money is deliberately keeping this spread wide so that you do not trade. You do not sell your shares when the Phalanx formation has already entered the market, because you are trying to save 5,000 rupees in that bid and offer spread. But if you do not sell, maybe the value of your shares will fall by 2 lakh rupees. So this is a very short-sighted approach that retail traders have, and smart money knows that, which is why I believe in behavioral technical analysis. So the wide bid and offer spread forbids in the sense it demotivates you from entering a sale, but that's precisely what it is. It is actually a sell signal. Now, as I have been telling my online family since September, the hazards that retail investors and bullish traders have faced because they did not trade due to the wide bid and offer spreads can be mitigated if you stay with me, connected with me on social media. We can basically help each other become better traders, and I can give you ample amounts of warning on all my social media accounts, including our Telegram channel, the link to which is in the description and in the pinned comment. The other signs are advanced decline ratio will stick around in the lower end of the range. The basis, which is the futures premium enjoyed over spot, will either be tiny or it might even be negative, which means the future will be trading at a discount to spot. Now, what does it mean? It means that the short seller is willing to sell even at a discount. Why is he selling? Because he knows he's going to make money, which is why he's selling at a negative cost of carry. So the basis is small or negative. The LWTD, or the lift weight thrust drag index, the tutorial to which is in the description and in the pinned comment below, will fall below zero, and the impetus will be screaming a warning all the time. Do all the scattered bits and pieces of the jigsaw puzzle that I just mentioned fall in place together now? Do you realize why I have been telling you since late September and early October to shift your money to sovereign debt? I'm not looking at 6, 7, and 8% of return on this sovereign investment as a be-all and end-all of my ambition in life. No, not at all. I don't aim to make 6, 7, and 8% in my life all my remaining years. I am trying to protect my capital from erosion in a market which is getting into a phalanx formation. The bear is beginning to push prices lower, which is why you must take preventive action and act now. Now, capital protection should be your primary objective first, foremost, and always. Capital is your freedom to trade. Lose your capital and you can't trade anymore. Friends, I was facing a lot of queries about when the Phalanx Formation video was to be released. Here you have it. Don't miss out our next video about why bear market rallies are so deceptive, so vicious, and behavioral technical analysis, understanding of bear market rallies like no one else can ever give you on YouTube. That is my assurance to you. I hope I've added value to you in this video, and lots more coming your way. If you subscribe to my YouTube channel and click on the bell icon, you'll receive instant alerts about fresh content being put up out here. And I'd love to hear from my viewers in the comment section, so please let me know what you think of this video and help me reach out to fellow smart investors and traders like yourself by referring my video to your family and friends. I thank you for your patience and sticking around in this video till we meet again in my next. This is Vijay Bhambwani signing off for now. I wish you have a very, very profitable trade ahead. Bye-bye and thanks.